It's an honor to be here and to share the stage with our panelists. And before we begin these discussions, let me give some context about this panel. So over the past decade, Saudi Arabia has delivered major reforms across the real estate and housing sector, strengthening regulation, expanding mortgage finance, and most recently opening the market to foreign investors. That is indeed a significant milestone for capital flows and market depth. These reforms have helped raise home ownership from around 47% before Vision 2030 to over 66%, and of course the target is to reach 70% by 2030, driven by coordination between the government and the private sector, and mainly the banks. So today we'll discuss how this alignment can sustain growth, manage liquidity, and attract long-term investment. Thank you all for being with us. Mr. Loay, let me start this discussion with you. When we look at Vision 2030, one of the success stories that we have seen is, of course, what happened in the real estate sector. There has been a phenomenal increase in home ownership. Tell us more. What role did the fund play in that?
Well, thank you very much, Lara, and hello to everyone here in attendance. I'd like to also thank the organizers and thank, first of all, His Excellency, the Minister of Municipalities and Housing, for sponsoring this event. I think it's a very important event. The Real Estate Development Fund started in 1974. And since that time, and honestly until 2016, it might have been the only destination for Saudi citizens to be able to access loans in order to procure or build homes. And with the advent of Vision 2030, the Real Estate Development Fund's role became much more of an enabler of the growth in the housing sector, working with our partners, financial institutions in this economy. Almost as many people since the vision, since 2017 until today, have been served, around 900,000 individuals, as have been since 1974 until 2016. Mm-hmm. That shows the level of, I should say, S-curve growth in enabling citizens. Around 70% of all portfolios among the banking sector have been in one way or the other subsidized or supported by the government. That also speaks of tremendous support and intent by the government to ensure that home ownership reaches its target. Our target, obviously, for 2030 is 70%. It doesn't get easier. It probably gets more and more challenging.
Though we're very close to that number.
We are close, but as you get closer, typically you need to look harder and make sure that you reach everyone. The fund's focus in the upcoming period will be to make sure that we can achieve access to these market tools of financing in order to buy their first home and to make sure nobody is left out from this equation.
We're going to discuss that at a later stage, but let me understand first. So your strategy changed from giving direct loans to citizens to guaranteeing these loans that are given by the banks.
Yes, it has been an evolution. We started off being the originator or the lender, and in 2016 and 17 we started subsidizing the interest that was owed to banks up to a certain principle. And since then, our subsidies have become much more targeted now, supporting things such as the down payment and trying to focus on the segments of society that need the help the most.
But you still hold a portfolio of direct loans?
We do.
Okay. Mr. Tariq, do you think it's going to be hard to reach that 4% remaining of 70% home ownership? Because if we look at the latest figures from the central bank. It's interesting to see that these are November figures, that home or mortgage origination is declining for the 4th straight month. And it's interesting to see that the figures for November stand at 4.5 billion Saudi riyal. That's 20% month-on-month drop, and that is 56% year-on-year drop. And if we compare this to the average that was given in 2025, that's below the average because the average stood at 6.8 billion riyal. Is this a decline in demand? How do you explain it?
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum jami'an. Thank you, Lara. And I think 4 months is a bit short of time to look at it. If we look at the last 5 years, with I alluded to, you will see 117% growth in the mortgage, reaching close to actually north of 800 billion in the banking books. In the last 12 months from December 2024 till November 2025, the latest information we have from SAMA, you will also witness that banking sector has added 90 billion of new mortgage loans. I think it's fair to say that the last 4 months has witnessed a correction reform from the government that has impacted the appetite of the lender, sorry, not the lender, the borrowers, on wait and see. Let's see the implication of these reform activities, whether real estate prices will go down. The government has also intervened on the rent, intervened on the awarding lands with an affordable prices for the eligible people. So people are on the wait and see mood. Going forward, I think the 4% target to reach the 70% goal is inshallah achievable, knowing that it is a moving target because we are a young population and more people comes to the eligibility of the government support. But I think the fundamentals for the mortgage are strong. The mortgage, we see a declining interest rate. We see a supply that's being created, led by NHC and other real estate developers, which will inshallah will avail an affordable houses also for home owners. And also we see the opening of the foreign ownership, inshallah, for real estate in Saudi. That will also create, inshallah, gradually a healthy market for mortgage. So I think it is achievable, inshallah. We still have time to that target. And again, fundamentals are strong to support that assumptions.
Tell us more about the numbers at your bank. Congratulations, first of all. The results are out this morning, better than expected results, but we don't have the figures for the mortgage growth. So I know up to 9 months, your bank, which is one of the biggest players in the mortgage in Saudi, managed to achieve a 6% growth in its mortgage portfolio. So what can you tell us about the last year's full results?
Alhamdulillah, 2025 was a very successful year, and especially on the mortgage side, with the unique partnership we had with the whole housing ecosystem, especially with the human real estate development fund. We enjoyed a great partnership, a partnership with the National Housing Company, which brought the growth on the mortgage activity close to 10% by the year end. So alhamdulillah, we have witnessed a great appetite from the market. It's slowed down, as you mentioned, in the last 4 months, but the backlog is building up, and we expect, inshallah, to continue supporting the mortgage for the 26 and beyond, inshallah.
Thank you, Mr. Tariq. Kashif, an interesting milestone that we have seen in the real estate sector is just last week, the market is open to foreigners. We don't have all the details yet. BlackRock has been operational in Saudi, I think, since 2019. You mentioned in one of your interviews that your investments in Saudi stand at around $35 billion, and they're divided into 3 main sectors: equities, bonds, and infrastructure. How much are you interested? And you're looking, by the way, to double or triple that in the coming few years. So how much of this additional investment is going to the real estate market in Saudi?
Thank you very much. And again, thank you to the organizers. Thank you for the invitation. And I think that to begin answering your question, I think that I would start with pointing out that in most economies, housing and real estate is generally one of the most important sectors, one of the single largest contributors to GDP. Typically around 15% of an economy is anchored in real estate. In addition, when you turn to capital formation and the growth drivers and investment activity in an economy, typically housing is almost 1/4 of overall capital investment spending in an economy. So our goal as a global institutional investor, as a manager of clients' money, and as a company that looks for growth and investment opportunities around the world is to essentially participate in drivers of growth so that our clients, which are retirees, insurance companies, pension funds, can earn sources of yield income and sources of growth around the world. So you mentioned in the public markets, we're active in the equities market and the fixed income market. In private markets, so far in the kingdom, we're most active in infrastructure, in particular in energy infrastructure through 2 joint venture investments we've made with Aramco. Real estate is a cousin of infrastructure. It's, broadly, often they're categorized under the term of real assets. And so as this market grows and as it becomes more open to institutional investment and foreign investment, it's certainly an area of focus for growth. Having said that, real estate finance is a subset of fixed income. And that is an area where we are very active and we think will happen even in the more near term. So real estate finance, particularly the movement of mortgages from the balance sheets of the originators, the banks, to institutional investors who are seeking high quality yielding assets, is something we're very excited about as well. So in our global fixed income business, our first exposures to the kingdom in scale really started in 2016 when the Debt Management Office, now the NDMC, increased global debt issuance from the kingdom, the sovereign bond issuance. Since then, the fixed income markets have continued to evolve, and we've seen banks in Tier 1 and Tier 2, and then in unsecured debt offerings, become active issuers. And we've seen some of the kingdom's leading companies, just for example, yesterday Aramco, also become regular issuers in the debt capital markets. SRC, a key member of the housing ecosystem, also in 2025 issued twice in the global dollar-denominated debt capital markets, and we saw institutional investors, ourselves and our peers, being active investors and sponsors in that. So we see a lot of scope for growth in the real estate finance sector.
So you're interested in mortgage-backed securities?
Correct. I think that, and it's well known that over the last 2 years we've been working with the housing ecosystem under the sponsorship and guidance of His Excellency the Minister on developing the ecosystem for mortgage-backed securities, which will increase the scope for direct lending by the banking system and also increase participation in debt financing and real estate financing from international institutional investors, particularly those that are long-term stable investors, such as the pensions and insurance sectors globally.
You're not interested in direct investments in residential or in commercial real estate?
No, I would say there's multiple avenues for institutional investors to participate in the real estate sector. On the debt side, residential mortgage-backed securities is one area. And it's an area with a lot of growth. As the CEO mentioned, the Saudi mortgage market is approximately 800 billion riyals in size. And that's grown from a very small number just 7-8 years ago. And we expect continued growth as homeownership increases to 70% and as that moving target of increased household formation increases as well. So it's not unreasonable to project that this market will be 1 trillion riyals in size. And a significant portion of that will be potentially shifted from first the balance sheet of the banking system to SRC, and then to, via securitization, to global and domestic institutional investors. So that's one avenue. Secondly, there's an untapped area in debt financing for multifamily and commercial properties. Globally, that's a market called commercial mortgage-backed securities, which is yet to be introduced in the kingdom, but there is great scope for that as well. Again, supplementing bank financing with non-bank debt financing. And turning from the debt markets to the equity markets, as an active investor in listed equities, naturally, some of those listed equities are real estate development companies, some of them are real estate investment trusts. But one of the largest global private markets alongside private equity and infrastructure is private investment in real estate. And as the regulations develop, as the openness of the market to international investment develops, obviously that'll be an area of study and focus for us as well.
Mr. Luay, from a government entity point of view, how important is what we are seeing right now in terms of securitization? Would it be reflected on mortgage rates for the citizens?
I think this is tremendously important, and I think one of the quite big, maybe quietly celebrated achievements in housing in Saudi Arabia is that there is an ecosystem that has been formed. You see many constituent parts that all play a role in this ecosystem. There is obviously the ministry and the housing program, but aside from that, there is also NHC, there is the REDF, there is Damanat, there is even NFSC, and SRC, as Kashif was mentioning. And I think there's very important roles for each one of these in making sure that the system flows and has the appropriate complementary contributions so that market economics can actually help this to become a sustainable growth story. Securitizations are definitely intended to reliquidate the banking sector so that new financing can happen. The Real Estate Development Fund is looking to work with its partners. As Tariq kindly mentioned, this is a key partnership for us to ensure that as many of our populace have access to these different products.
Mr. Tariq, on that note, and it's interesting what you mentioned earlier, so what I understood from you is that banks have an appetite to lend foreign investors, that's one. Two, you are expecting that mortgage rates will remain, will trend lower. Is this true? And this is something interesting because we are seeing some liquidity squeeze, let's say, in the Saudi banking sector, especially when a loan-to-deposit ratio stands at more than 100%. So there's a lot of demand for loans, and yet you still expect there would be an appetite to lending foreign investors in the real estate market?
Let me start by defending banks in Saudi and saying that banks are highly liquid, despite the prudential ratio that we see from our blessed prudent regulator in Saudi, SAMA. But the banking are committed to support the growth in the economy, including the mortgage activities in Saudi, along with many other growth opportunities in the economy in Saudi. Banks, as I said, it's highly liquid. We still have liquidity, very healthy and ample. We've seen a competition in deposits, and that's catering for the expected growth, inshallah, in the coming years. And that has caused the cost of funding to be increased. When I mentioned the interest rate decline, I was referring to the Fed and the SAMA.
How about the mortgage rates?
The mortgage rate, I think it's supply and demand.
Okay.
And we'll definitely see a competition in the market between sectors. Again, the mortgage is one of the attractive sectors to the banking sector, driven by it is a low risk in nature, backed by security, and also doesn't consume from the capital from a risk-weighted perspective. So that gives the banking also always the appetite. Again, also when talking about the securitization, I think it is a product where we see appetite from local but also international investors. So it is as a product that we can easily recycle and securitize, and we know that there is a there is a demand on having it as an investment product. So we will continue support. we have now the vehicle with SRC and also, inshallah, with the international investors to securitize that portfolio and continue the model of potentially generate and distribute, which we've been in discussion, and that a commitment from the banking sector to continue supporting the mortgage, inshallah.
So when we look at mortgages, and they constitute currently around 23% of the loans in the banking sector, in the Saudi banking sector, this is a healthy rate, in your opinion? Do you would like to see it at a higher rate, given that you're telling me this is a good asset?
Definitely it's not in the high rate.
Okay.
I would, my personal view, between 25 and 33% of the total lending portfolio is still in the healthy side. In SMB, we have 26%. The market is at 23%. And I think up to 33%, 1/3 of your lending portfolio, I think it's still in the healthy side, which means that we have an ample room to grow the mortgage as a banking sector.
Thank you, Mr. Tariq. Kashif, we mentioned securitization. Another thing that Saudi Arabia is looking at is tokenization, and is starting testing that with NHC. So how significant also is this step in creating liquidity in the market, in your opinion?
Thank you. So tokenization as a technology has the potential to quite significantly make overall financial markets and services more efficient. And I would say there's two results from tokenization. Number one is, as we all know, the process of either buying a home or entering into a mortgage is one that can be time-consuming and involve a fair bit of paperwork and has longer, let's say, settlement cycles. And what tokenization does essentially is turn manual processes into almost instant settlement digital processes. So there's an efficiency gain to the system overall from that. Secondly, by taking something large and breaking it into small pieces, there is a broadening of the market where more investors of all sizes can participate in a market. And when a market's size grows, that means more participants can fuel the growth of the market and fuel the breadth of the market. And so we can say tokenization is a little bit the next generation of an innovation many years ago in real estate, which was formation of real estate investment trusts, where people could buy real estate properties in fund form. Tokenization is taking that several steps further and making the pieces smaller. But it makes the market broader. It allows more people at all levels of wealth and savings to participate in a growing asset class. And so as a global investor, we see that a lot of the effort we put into at BlackRock around the world is around making capital markets deeper and broader. And at the executive levels of our company and globally, not just in the kingdom, tokenization is a technology that we are embracing and exploring.
Thank you. Luay, I have two questions. My first question is, how are the products that you are offering evolving in a way to secure for the current demand that we are seeing from Saudis in the real estate sector? And my second question, aren't you worried that since foreign investors are now going to be major players in the real estate sector, aren't you worried about what will happen to real estate prices? Or do you think the safeguards that that you have put in terms of rent freeze and of course the fees on white lands, is this enough to keep prices contained?
Well, thank you, Lara. I'll start with, first of all, talking about the products and services, the new ones that we intend to launch in this market. And definitely tokenization and fractional ownership is a theme among the themes that I think will be part of our future offering. The current generation of home buying Saudis is different than the previous ones. They're different in their behavioral likes, in their tendency or liking to live in communities, in urban areas, perhaps even smaller units to an extent, the size of families, and that change also has an impact on the real estate and the homes that they choose. We care a lot at the Real Estate Development Fund that we ensure that we're enabling this future generation. Another aspect that I think, aside from their likes or behavioral wants, exist is also the kind of products and the ease of these products. One of the key products that we're envisioning having in the next few months is a rent-to-own scheme that would enable individuals who don't necessarily have what is required to be approved or accepted by the banks for a mortgage today to somehow create for them a path to home ownership. And that is one of the products and services that could have a fractional ownership as well as tokenization element embedded in it. So we're all about trying to enable access to the different segments and also being conscious of how the new generation is different than the ones that preceded. To your second question, no, we're not worried. I think if anything, we've seen in the last few months that we have a very vigilant leadership in this country that is very focused on making sure that real estate as one of the key drivers of cost of living and spend is always balanced. We've seen that in Riyadh through the different regulations that have been passed related to renting, as well as in the disbursement of lower cost lands in the capital. So I'm not worried. I think if anything, the new customers and new consumers in this market will bring with them good products, will bring with them an influence on developers for new kinds of real estate products, maybe even new kinds of financing products. So I think all of that is going to be very, very positive for this market and will enrich the market.
I want to hear both of your opinions because we have 2 minutes left. Because if Mr. Tariq, do you share these views? If we look at a city like Istanbul, and 10 years after it opened its markets to foreigners, the property prices went up by 500%. So can we see this scenario here, or we have the safeguards?
I think maybe Istanbul has more maturity in opening up for foreign investors. In Saudi, I think that will take time to mature. We know that we have a competitive advantage when it comes to Mecca and Medina, and we expect to see more appetite in these two cities. I think by creating more supply, we can ensure always that we contain the prices, and that, mashallah, looking at these interactive screens and seeing these projects all around the kingdom, that gives us a comfort that the continuous investment in the real estate and continuously providing the supply will always continue maintaining the prices at an acceptable and affordable level, inshallah.
Thank you, Mr. Tariq. Kashif.
I would echo what my colleagues have said. I think that the key is balance, and I think one thing that is quite unique about the kingdom is, as Loe mentioned, the housing ecosystem. So the role of National Housing Company, the smart targeted support from Real Estate Development Fund, the offset to the growth in the banking balance sheets from SRC, all of these work in a very coordinated way to create that balance over time. Secondly, I think with the introduction of foreign ownership, what you'll continue to see is market segmentation. And one of the most vibrant and competitive sectors among the private sector in the country, from my observation as a relatively recent resident, is the real estate developers. So I'm very confident that the market will produce the products that are affordable and demanded by the changing demographics of the country, as Loe mentioned, that the new home buyer, those that are entering their 30s, are looking for something different. And I'm very confident in the private developers' ability to meet that with more supply. I also think the kingdom is blessed with something very simple, which is size. There's a lot of land, which is different from a lot of other global cities which are shaped by their geography. And in addition, you could say the kingdom's one of the greatest endowments that's enduring is energy costs. And in construction costs, energy costs are one of the biggest inputs into cement and materials, etc. And so those are areas of enduring advantage, land and energy.
Kashif, and if I may, very briefly, because you are the foreign investor here, and we don't have all the details about foreign investments in real estate, what are essential things that you would like to see before investing in Saudi Arabia, so that Saudi Arabia can become a major attraction for FDIs in the real estate sector?
Sure. Look, I think that the prerequisites are, one, people look at the economy, demographics, connectivity of a country. And I think all of those are there. This is a large country of approximately 35 million residents, growing over the next decade plus to 45 and 50 million before the population stabilizes. So it's quite a large country. It's going to be or is roughly the world's 15th largest economy. It's almost too big to ignore for a global investor, number one. Secondly, you need connectivity, you need infrastructure. The quality of the country's infrastructure, water, power, transportation, with the introduction of the metro over the last years in Riyadh, and I understand in the near future in Jeddah, is also going to be something that's advantageous. Air connectivity is improving. So I think all of the ingredients are in place. Of course, there is ongoing regulatory change, the introduction of the foreign ownership law. As those rules are detailed and absorbed by the market, I think those are the next things that are required so people understand the parameters and rules of engagement.
Thank you all so much. Unfortunately, our time is up. There are many points that we can still discuss, but thank you so much for this engaging discussions and for your insights, and thank you for your attention.